Sunil Subramanium also with us, so let me take that to him. And Sunil, you've actually been a perpetual optimist. I remember when we were speaking to you earlier in the week, even you were trying to find the kind of silver lining in this fall. Today, and I see you've got Krishna with you as well. Are we now trying to look past this immediate crash, as we just heard from Prabhat, and be a little bit more holistic about it? Because in the near term, and while we are seeing some stability on the index right now, it's been an incredibly stressful week.
Absolutely. See, we've always maintained that fundamentally what's happened in the markets is not something that's happening to the economy. So if you look at it, and as he correctly put it, there's a medical part, there's an economy part, and there's a markets part. So I think if you look at it from India's perspective, I would say both medically and economically, India is in a far better position. The government has handled it far better than the rest of the advanced world. So you see the number of cases, how we've handled it, shutting down all the entry into the country, cancelling all visas, having all the big tournaments like the one-day matches and the sporting events like IPL without spectators. I think India, for a change, has been up on the curve. So medically, I believe that we are ahead of the curve. Second is, economically, there are two aspects to this, right? One is the negative impact of a supply disruption which started with the Wuhan crisis. Today is easing off because we already see Wuhan is also coming back, but northern China, I think the supply has already started. So whatever we feared about the supply disruption going on for a longer period, I think that has come down, number one. At the same time, there has been the positive impact of the oil prices, which is hugely beneficial for the Indian economy. The third aspect is the inflation. I saw the inflation numbers come off yesterday. And so I think from that perspective, with an imported inflation as well as the food inflation being soft, the stage is set for RBI to also be easy on the liquidity. So I think whatever happened in the Indian markets is essentially a knee-jerk reaction of ETF investors pulling out money from funds, and hence the risk-averse situation coming and impacting our markets. So we believe this correction in the market is a little bit overdone relative to India. So I think the level of correction that's happened is definitely overdone, and I think we retain, and I would like Krishna and Kumar to kind of take on from here on this view.
KK, why don't you add your views on what you're making of the situation at hand right now?
I think we did see a bit of a panic over the last week, and as reflected in the near 25-30% fall in the indices and across various market cap range. So I think we did see a panic bottom of sorts getting formed today morning, and you did reach a point in time where you really did not need to look at the valuations to go and buy the stock. So you really, the stocks are so attractively priced, on a fundamental basis that, investors would like to go and get invested. So I think that was the kind of levels that the markets reached today. We do believe that, in the base case, we are factoring in a couple of months more of slower economic growth, which will definitely impact CY20 numbers. But we do believe that, through containment and probably through a vaccine development in the next 1 month, we would be able to get some reprieve from this spread of coronavirus. So we do build in the 30-40 basis points lower global growth at this point in time. At the same time, one should remember that the central banks across the world, and particularly Fed, has done a very, very accelerated thing in terms of backstopping any liquidity crisis that could happen across the world by willing to pump in about $1.5 trillion on the shorter term markets. So we believe that with lower rates, good liquidity, the financial system, the financial markets will not seize and freeze. So that's a big risk out of the way. At the same time, there are some sectors which will get impacted, but I think the fiscal stimulus that is being talked about of the tune of $75 to $100 billion by various countries will come and help in a long way when the virus is behind us over the next 1 to 2 months. So I think the recovery could be very sharp post the virus containment across the world, and that should provide a lot of positivity for the equities. The valuation support that we have today is enormous, and that is the reason that we would advise investors to be invested in the markets and stay through the pain, but also add on declines like today, so that you have a great wealth creation in a 3-year time frame.
Now, I'm going to ask a very simple question, and anybody can answer it. And somebody who wants to answer between you and KK can raise their hand. I will, so that there is no confusion. When I used to meet Sunil and KK, they always told me that markets is right. When I used to ask them 1 year ago, which is that why markets are going up, earnings are not there, Sunil and KK have always told me that markets get it always right. Now markets are falling. So who will get it right, who will get it wrong? If I go by a previous logic, if markets are falling, economy should also fall. Who wants to answer this question?
I'll take it. So markets are, right normally, but there are periods of time when, sentiment and panic, I think, takes over, right? So when there is the risk of the unknown, the uncertainty, if it becomes large enough, then there is panic. And as Prabhat also mentioned, even on a fundamental basis, a lot of the machines, the algorithmic system which trades in the markets today will throw up a much more, lower valuations, and that also triggers. So I think, panic comes in different forms, and particularly when you have a big unknown in front of you, and when, the world is moved to algorithmic trading, I think that's something that's also been a bit of, had a bit of big hand in this fall over the last 1 month.
Sunil, for a non-sophisticated investor, somebody who started at SIP, the message is that keep on buying, law of averages will work. But another message which market terminology has taught us, that bull market, when they become bear market, it does not become a bull market automatically. It could take months, it could take years. I hope it's not the case this time, but if that is the case, where a bull market has become a bear market, technically speaking, why do you think we are not in for a long winter? Why do you think this is going to be a cloudy day and sun is going to be shining again?
So I think basically, Nikunj, this comes down to the fact that what is an SIP investor seeking from the investment, right? So ultimately, you are trying to do long-term wealth creation. And the principle behind an SIP thing is that the best time to start and to continue an SIP is the bear market. Because what is important for an SIP investor is that when he wants to take his money out, the market should be in a bull phase. Now, you can take two scenarios here, Nikunj. Somebody who started the SIP in a bull market, he needs the money now, he's in a bear market. Yes, that's the sad part, because when he needs the money, the market is not supportive. But the key then is that whenever there's a bearish phase, that if you stay invested and buying, right, when you have targeted goals and those goals are reached, is when you should generally liquidate. And typically the retail investor does the opposite. He comes in when there's a buoyancy in the market, and he then panics when he pulls out. So the counterintuitive thinking is, I think, the answer to the way forward, Nikunj. That's the way I would say that the equity markets, you've got to be counterintuitive in your thought process, especially for an SIP investor.
I really hope that today when we are talking about a stormy day, but next time, gentlemen, let's hope that when we talk, we are talking about happy days. Thank you for joining us. It's the middle of the day. We've convinced you to come and join us on a screen when everybody's glued to the market screen. So really appreciate your time.